Okay, the June 15th market scorecard is flashing a massive signal. Welcome to today's Explainer, where we're breaking down a truly historic session. The title of today's deep dive really says it all. KSOPI surges plus 5.20%, Hormuz were priced as supply chain, not risk on. Because, guys, these headline numbers, they're totally masking a structural shift in capital, and we need to talk about it. So, what exactly was the primary catalyst here? Well, it's the newly announced U.S.-Iran ceasefire. The Hormuz Strait is fully open, and the U.S. naval blockade is officially terminated. Just like that, a massive geopolitical overhang has literally been wiped right off the board. And the immediate reaction? Absolutely explosive. The KSPI index rocketed up 5.20%, closing the session at 8,545.98. But here's the thing. To really understand that equity surge, we have to look over at the commodities tape. WTI crude oil dropped exactly 5.00%, landing at $80.64. Brent fell over 3% too. This actually marks the third consecutive session of a really steep decline for oil. Now, it's super important to note that this dramatic price action wasn't just some blind, broad market risk-on buying spree. No way. When you look closely at the underlying capital flows, it reveals a highly calculated, surgical strategy by foreign investors. Which brings us to Section 1, Oil transmits the shock. Think about it. South Korea imports 100% of its crude oil. There is zero domestic buffer, right? Therefore, when global energy costs drop sharply like we just saw, those reductions transmit directly, and I mean immediately, into the manufacturing margins of Korea's industrial supply chains. Their entire cost structure literally changed overnight. You can see this in the extreme sector concentration on the board. Large caps gained 5.4%, while small caps lagged way behind at just 1.6%. Foreign capital wasn't just buying everything. They moved with incredible selective precision, targeting very specific names. The real story, as always, is in the data. The big headline screamed that foreigners bought 1.01 trillion won in KOSPI. But if you look elsewhere, they aggressively sold 806.4 billion won in KSDOC and dumped another 175.9 billion won in futures. So their total net exposure? It actually changed by a measly 29.6 billion won. This wasn't a flood of new money. It was a massive, highly calculated rotation. Let's dig into Section 2, Surgical Market Repositioning. Foreign investors executed this rotation based on one strict criterion: unpriced energy benefits. They rushed into positions where the broader market hadn't yet recognized the new margins. Let's look at the first domino, what we're calling the Hyundai swap. Institutions sold 67.6 billion won of Hyundai Mobis, which is, a step removed in the vehicle supply chain. They took that capital and immediately bought 115 billion won of Hyundai Motor. The logic here is pretty straightforward. Lower fuel prices directly and quickly boost end consumer vehicle demand. Foreign capital wants to be positioned in the end product manufacturer first, the one that captures that immediate demand and lower input costs. And here is the next domino. The LS Group swap. Foreign investors dumped 26.9 billion won of the diversified LS holding company. And what did they do with it? They swapped it into 78.6 billion won of LS Electric. They're deliberately bypassing the diluted holding company layers to grab direct, concentrated exposure to the incoming Middle East power infrastructure boom. Moving on to Section 3, the AI semiconductor rotation. This is perhaps the most crucial hidden signal of the session. We saw a massive shift from broad market beta into pure AI exposure. Take Samsung Electronics. It carries a highly diversified mix of memory, foundry, and smartphones, right? But that diversification actually dilutes their benefit from a boom in AI server capex. SK Hynix, on the other hand, operates as a pure-play memory producer leading the pack in high-bandwidth memory for AI. So we are seeing real capital flight here. Smart money is rapidly abandoning the diversified tech giants and moving directly into the pure AI infrastructure supply chain. The rapid-fire numbers on this swap are just incredible to look at. Foreign investors sold 610.3 billion won net in Samsung Electronics. In that exact same session, they bought a combined 609.9 billion won in SK Hynix and its holding company, SK Square. I mean, that is a near-perfect dollar-for-dollar cross-group swap. Let's wrap things up with Section 4, True Institutional Capital Flows. Let's dissect exactly who provided the liquidity for these massive market swings. Basically, retail individuals eagerly took their profits on the headline news. They sold 1.49 trillion won in KOSPI. But that retail selling is exactly what supplied the vital absorption liquidity that institutions needed to execute their rotations. Institutions bought 760.2 billion won net across both markets. And this buying was incredibly narrow. Get this, when you net out all the trading, Samsung Electromechanics alone represented 94.9% of the total KOSPI foreign net buying. Just let that sink in for a second. Which brings us to the overarching thesis of the day. As the data definitively proves, institutions were the only source of genuine new capital in this session. All those explosive headline numbers, they were driven by fundamental institutional repositioning, not retail euphoria. So this leaves us with a really critical question to watch closely in the coming days. Is this surgical rotation just a one-day shock to the system, or are we witnessing the beginning of a permanent, fundamental repricing in global supply chains? Because one thing is for sure, capital has drawn a clear line in the sand about where the real value lies in a post-blockade market. If you found this explainer helpful and want to receive news on the closing of Asian stock markets before the New York tape even opens, make sure to hit that subscribe button now. See you next time.